The one thing that you have to understand is poop. P-O-O-P. Panic leads to overselling, leads to opportunity, leads to profit. If you understand poop, you will understand how you can actually make money when you see chaos in our economy. Every single bubble that we've seen, regardless of the asset class, whether it's real estate, whether it's cryptocurrency, whether it's stocks, whether it's tulips, follows the same pattern. First, you have an asset that people want to own. Then people start to buy this asset. As the price of this asset rises, that's when you see the fancy money managers say, ooh, the price of this asset is rising. We want to buy in as well. As then more money goes in, the price of this asset rises even higher. And that's when you start to see the complex financial derivatives gets created, because now people want to gamble and make even more profits on their bets. Now you start to see these financial complex derivatives and instruments get created, and now the price of this asset rises even higher. And then the media comes in and they talk about how high this asset price is going, and now everybody gets excited and they want to buy in, and now the price really starts to soar, and then eventually you start to see the buyers start to go away. And as the buyers start to fade away, that's when things start to shift. The price of this asset no longer continues to rise at the same speed as it was before, maybe even begins to fall. And that's what triggers the initial selling. And now as the selling starts to happen, people start to get scared. They start to panic. The price of this asset starts to fall. That's when the media comes in and they talk about how this asset is crashing. People get even more scared. They sell even more. And now the price of this asset falls drastically. And that's when you start to see some smart investors come in and they see this as a great buying opportunity while everybody else is running away with their heads cut off because they want to get away from this asset as fast as possible. Let me show you. We all painfully remember the 2020 pandemic, but the real question is, what did you do when the pandemic hit and the stock market was crashing? Were you running away, getting scared, or were you buying during that opportunity? Because if you remember when 2020 hit, the media kept talking about how we were going to be locked up in our homes while the markets are tanking. This was the first P, creating the panic. People saw the market sell off, they thought the economy would never recover, and they thought that we would never leave the comfort of our homes again, which then created the first O, overselling, because people wanted to get out of the market. Then, in just a matter of days, the stock market had fallen by more than 30%, which created a huge buying opportunity for some people, which then created the second O, opportunity. And finally, to top it off, the Federal Reserve Bank opened up their money printer. They unleashed a tidal wave of quantitative easing, and the stock market rallied at the fastest rate ever, which allowed some investors to profit hugely. And of course, that's the second P, profit, which is the final step in poop. Now, let me highlight this 2020 pandemic crash a little bit extra because I saw this from a very unique lens, not just from an investor, but also as a content creator and as an entrepreneur, because I work in the financial space. I run Briefs Media. This is a media company and we work primarily in finance. We publish a daily newsletter called Market Briefs. I actually created Market Briefs because of this 2020 pandemic. But the market started crashing. And before the market crashed, before the pandemic happened, I was making 3 videos a week. The market crashed then, the economy went upside down, and I immediately went from 5 to 7 videos a week because everything was going crazy. So now I started talking about what was happening, and I said that I was investing in the market on the way down. I said, I have no idea how bad it's going to get in the markets, but what I'm doing is I'm buying in phases on the way down. As the market's crashing, I'm coming in and buying more. And the interesting thing that happened here was I would get a flood of comments. And I know this because I read these comments. I saw this. I saw the market perception. And I'll tell you something else. On the internet, people don't feel the need to hold back how they feel, especially in the comments section on YouTube. So people were talking about how I had lost my mind for buying stocks on the way down because the whole economy was about to implode, the world was going to end, and all this crazy stuff was going to happen as if things would never recover. Because when we go through any sort of downturn, we tend to put ourselves in this like tunnel where we think things will never improve. This is a very common thing that has happened in the past, and I'll give you more examples of this, but that's what we saw in 2020. So I talked about how I was buying on the way down, but a lot of people were very openly talking about how this was one of the worst things that you could do because, well, why would you want to buy stocks in the middle of this craziness when markets are crashing? Well, the part that I did not expect, and I'm going to be very honest here, I have studied the economy and markets pretty closely. I have studied what has happened in previous recessions as well. There was no way that I could have predicted the amount and the extent of the quantitative easing and money printing that we saw happen in 2020, which was a shock to the world, but me as well. I had no idea that we would see this extent of money printing, quantitative easing, and bailouts by our central bank and our government. What did that do? That created a tidal wave of money entering our economic system, which exploded the stock market at a rate which I had no idea would happen. I talked about why I was buying on the way down. I had no idea that it was going to go up that quickly. But we've seen similar things happen, not in that quick of a time span, but it shows you this is why, number one, you have to understand what's happening, and then number two, understand how you can capitalize on it. Because if you get caught up in that first P, that panic, you're going to be the person that's overselling. And we've seen this happen again and again and again. But the people that make the most money are not the ones that are overselling or panicking. It's the ones that understand what's happening. They can stay calm and they can find the opportunity. Now, of course, if you do want to stay up to date on what's happening, when it's happening, so you don't get blindsided, that's why I created Market Briefs as a free newsletter to help you stay up to date on what's happening in the top finance and business news. Every day, my team's breaking down of what's happening in the economy, the stock market, the housing market, the global economy, and our own economy into a fun, witty, and easy to read email. You can read it in less than 5 minutes every morning. We have hundreds of thousands of investors reading it every single day. It's completely free. So if you have not joined Market Briefs yet, I got the link to how you can join down in the description below. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.